Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Minash. On today's show, we're taking a look at the stock market. Now, we don't really know what the future will hold, whether the market's going to go up or down and by when. But we can observe trends and see what those trends are telling us. So far, the run-up in the stock market is narrowly concentrated in a few companies. It's a little more broadly based than the Mag 7, but not much. Now, first of all, there's no secret and no surprise that companies are reducing headcount with the advent of AI. I'm here to say that the benefits of AI are eventually going to permeate through corporate America on the income statement and eventually on a much broader basis than those 7 companies. This is not just happening in tech companies that are writing code using AI. The real opportunity is for companies to leverage AI in creating new business models and to drive growth. That will come in the future, but for now, the vast majority of companies are simply looking to leverage AI to improve efficiency without necessarily redesigning their business entirely. The net result is that companies are going to be cost-cutting their way to increased profitability over the next year or two. And while it's true that very few companies have ever cut their way to greatness, many companies will focus on expense management to deliver improved operating results to Wall Street. If this thesis holds true, let's see what the big 4 accounting firms that have studied this question with respect to AI savings have to say. Now, for now, most of that evidence is still survey-based. It is not audited hard dollar savings. The strongest findings are around productivity gains, workflow automation, reduced operating cost, and return on investment. But the data is uneven. A 2026 survey by accounting firm PwC found that 26% of the CEO surveys said AI reduced costs over the prior 12 months, but interestingly enough, 22% said AI increased costs, and 56% said their company saw neither higher revenue nor lower costs. Only 12% reported both a revenue gain and cost reductions. The folks at Deloitte found that 66% of surveyed organizations reported productivity and efficiency gains from enterprise AI, while 40% reported cost reductions. That survey covered a little over 3,200 leaders across 24 countries. The folks at Ernst & Young conducted a survey last year of 500 U.S. senior decision makers and found that 97% of AI investing organizations reported positive ROI across business functions. It also found that organizations investing 5% or more of budget in AI outperformed lower spending peers in technology upgrades, customer satisfaction, and cybersecurity. Ernst & Young also reported that 96% of AI investing organizations saw AI-driven productivity gains over the prior year, with 57% seeing significant gains. The folks at KPMG found that organizations expect to spend an average of $207 million on AI over the next 12 months, almost double the prior year forecast. 54% had integrated AI agents into operations, 73% used AI to automate workflows across multiple functions. So all of the savings showed up first in labor leverage, faster cycle times, customer support in particular, IT efficiency, cybersecurity, finance operations, document review, and workflow automation. Now let's look at some actual case studies of companies that have made cuts since the start of the year. We'll start with Salesforce.com. They reduced their customer support headcount from a total of 9,000 people to about 5,000. They cut the customer support staff almost in half. The folks at Cloudflare cut 1,100 employees globally, and they said that AI usage had risen more than 600% in the first 3 months, and that the costs were about redesigning the company for the agentic AI era, not individual performance. The company Snap, the makers of Snapchat, cut 1,100 employees or 16% of their global workforce, also citing advances in AI, which helps their teams reduce repetitive work, increase their velocity, and operate in smaller teams. Hewlett-Packard announced a planned reduction of 4,000 to 6,000 employees. That company-wide initiative is intended to improve productivity through AI adoption, with expected run rate savings of about $1 billion by fiscal 2028. The folks at Amazon cut about 14,000 corporate roles in one major round. Those cuts are tied to reducing layers, to moving faster, shifting resources to bigger bets, and they noted that AI is enabling companies to innovate much faster. Amazon CEO Andy Jassy also warned that AI efficiency gains would reduce Amazon's total corporate workforce over time. The folks at IBM are cutting about 7,800 jobs. These are both in back office roles including human resources that could be replaced by AI and automation, with much of the reduction coming through attrition rather than layoffs. The folks at Dropbox cut 500 jobs, or about 16% of their staff. They too have cited slowing growth and the arrival of the AI era, saying that AI would transform the knowledge work within the company and that Dropbox needed to invest in new areas. The folks at Klarna reduced their workforce from about 5,000 to 3,800 in over a year, largely through attrition. They said that their AI assistant was doing the work of about 700 employees. It reduced issue resolution time from 11 minutes to 2, and it lifted revenue per employee. So there's no question AI can create savings, but the savings don't necessarily come directly from the software. They come from disciplined implementation. I believe this form of cost cutting is going to work. Cost cutting has been around since the beginning of time as a way of improving corporate profitability. Many companies have cut expenses but ultimately mortgaged their future. This time I think the savings are real. So this cost cutting will work in the short to medium term. It will deliver operating results to Wall Street. And we're not talking huge breakthrough results, but operational savings that will improve profitability. And for that reason, I expect we're going to continue to see a rising stock market, this time more broadly based than just the Mag 7 stocks. That will extend this bull market even in the face of a possible economic downturn. As you think about that, have an awesome rest of your day. Go make some great things happen. And we'll talk to you again tomorrow.